All right, good morning, everyone. Assalamu alaikum. Thank you for coming on time. I appreciate that. Inshallah, we'll go ahead and get started. As people come in, I'll be letting them in. So I apologize if I'm a little bit distracted here. Brother Muzammil is not here today. He's attending a previous engagement. Um, so for some of you who didn't attend last week, or if everybody attended last week, then great. I know we had a few slides left on the candles and charts. But don't worry about those. I'll be covering them in either this webinar or the next one. They're important, but not as important as some of the other things that we're going to learn today, inshallah. Today, we're going to be learning about trends and patterns. We're going to put everything together that we learned from candles and charts and see how these trends are created. So with that, we'll get started. Quick disclaimer. Um, it's not financial advice. It's just education. Inshallah, it benefits you, then it's great. So this is our series overview. We completed candles and charts last week, and we have a recording of that on the WhatsApp group. Or if you didn't get the recording, if you haven't watched it, I definitely recommend you to watch that first before moving on to this one. But if you're here, then you'll still get the benefit of being in this webinar. So today we're going to do trends and patterns. We're going to take everything we learned with candles and charts and yeah, you had a question, Brother Ahmed?
Yeah, we get only the summary from the last session. I
Okay.
didn't I didn't see the link for
For the
the
video?
recording.
Yeah,
Yes.
it's on the announcements page, but I'll
Okay.
go. It's a YouTube video, so I'll go ahead and post it here as well
Okay. Thank you.
before this webinar ends. But yeah, good question. Thank you. Okay, so get started here. I like this quote with Warren Buffett. He says that I will tell you how to become rich. Close the doors, be fearful when others are greedy, and be greedy when others are fearful. And this is true, when when your local barber or the person that you least expect to invest is talking about Tesla and Nvidia and hey, I want to invest in Bitcoin and stuff like that. You have to be careful because that means everyone's in and a top maybe or a correction may be coming. So now, what is a trend? This is the definition. This is the book definition of a trend. A trend is a general direction of a market or an asset's price. Now, in TA or technical analysis, trends are identified by trend lines or price action that highlight when the price is making higher swing highs. Now, swing highs and higher swing lows means the higher highs, higher lows, like we identified last week, when we have something that goes up like this and then drops and then goes up like this. Now, this is a high, this is a higher high, and there's a higher high, there's a higher low, and that's a higher low. So we see that the general trend is an uptrend. So that's what they're talking about when they say swing highs and or swing lows. Swing lows are basically when the price is dropping and you're trying to figure out when to get out. Then you see that there's a low here, there's a lower high, and now the price comes back up, drop again. You have another low, and you have another lower high. So that indicates a downtrend, obviously, and then this indicates an uptrend. So now we're going to take that and then figure out the patterns that happen within these trends. Like what happens here in this area right here? How do we know? How do we know how to get in? And this can be applied to any time frame, but we're going to take a higher macro view at it, inshallah. So, all right. Again, a pattern is a series of data that repeats in a recognizable way. Patterns can occur with a downward or upward trend, or they can mark the beginning of a new trend, and I'll show you exactly how that works. The best patterns, every single pattern starts off with something called an ABCD pattern. Now, you don't have to call it an ABCD pattern. You can call it a zigzag pattern. A lot of people call it a zigzag because they move up like this. It's like a little zigzag, right? The stock market always moves up. So I always get this question like, why does the stock market have to drop a little bit? People have to make money eventually. So, if you're buying way down here, and you see the stock market move up this high and then it pulls back. So there's a lot of people taking profits right here. That's what's happening. That's what happens in these corrections. Now, if that profit taking becomes massive selling, like everyone is selling, then this is not going to end up right here. It'll end up way back down here again. But these corrections happen, and these corrections are very healthy. And if you have corrections like this, it's a perfect opportunity to add to your position take profits or enter a new position. So we have to know how the market moves. It's very, very, very important. Anytime a strong move happens up, don't think you missed the boat if you didn't get in. Yeah, you may not get the best price point, but wait until it pulls back. And when it pulls back, that's your opportunity to get in. But when people see red, when people see the color red, they're like, "Oh my God, it's dropping down. I don't know if I want to get in." But red is my favorite color to get in at. I mean, a lot of people, they go, "Why are you getting in when the market is pulling back?" You have to get it at a discount price. You don't obviously you don't want to pay premiums and buy it up here. You want to buy it down here, and then when it starts pushing back up, then you have a better price and you can add while it moves back up. Um, so pullbacks are great. So when you have a pattern that says ABCD, now what the ABCD actually represents are these waves. These are called waves. Like there's small patterns going up like this. There's smaller patterns within this wave that go up and then they correct A, B, C, D, E, and then they go up like this. So that's how the stock market actually moves. You may and as you dig deeper into the time frames, like if you start off in a larger time frame, like the monthly chart, like let's go back to our example on the S&P 500 index, and we're looking at the last week we looked at the 3-month chart. And when we look at this chart, it seems pretty clean. But within this big move up, there's smaller moves, and you can't see that on a 3-month chart. You have to drill down a little bit to the 1-month chart right here. So when you drill down, you'll see that these patterns, there's smaller patterns happening. Like for example, this you wouldn't have seen. You would have just seen with a big red candle, but you see a move up, and the zigzag patterns present themselves everywhere. You got a B, C, D. Let me change colors here. There you go. So, so these patterns are constantly presenting themselves. Yes, they may not look as pretty as this. I mean, they never look like this, but these patterns do present themselves all the time in a form. As long as you know that this high is higher, right? Right? You have a low right here, you have a high. Now this second high is higher than this high, and then when it pulls back, we're hoping that this low is going to be higher than this low, and then the price keeps pushing up. So these are ABCD patterns, right? So a lot of people use these patterns to determine when to buy and sell. So yes, there's two waves that go up, one, two, three. One, two, three, yeah. And then the fourth wave usually is a small correction. Um, and it depends as you drill down into smaller patterns. But the most important thing to know is that any price action that goes up has to correct a little bit. So that doesn't mean we need to panic in these corrections. And even when it's a bearish market obviously means when the stock is dropping prices, and the bull market means that when the price is going up, you'll have moves like this where the market will drop hard and then it'll correct a little bit. And some people get happy, oh wow, the market is recovering, let's jump in all out. But it hasn't. You have to make sure this gets higher than this. If it doesn't, then that correction hasn't completed yet. And then it starts dropping. Then a lot of people get excited. Whoa, it's at support. Maybe we can get in right here. And then it continues correcting. Then it'll pull back, retest this area, and then continue dropping. So now you have a lower low, you have a lower high. And then now you know that you're in a downtrend. So it's good to identify price with zigzag motions like this, because that's the way the market moves. And not all zigzags or ABCD patterns are created equally. They're all different. And I'll show you that in a live example, but here's a quick way to see it. Some are very sharp. Well, you'll have one candle, two candle, three candles move up, and then one large candle that'll come down like this. And, that's a weird candle, but yeah, you get the point. The candle will just move down. It won't be in a series of candles. Sometimes the price will move up hard, and then it may go in a small range. You see, this is the range that I'm speaking about. Like there's a small range right here that'll move in. So that's also your little B correction, right? That can be this correction right here, the little B correction. Like I said, it doesn't look always clean. It just needs to pull back. And that's why we expand our macro view and look at the higher time frames. If we get too deep into like daily charts or 4-hour charts, then it's harder to see what the bigger picture is. Is it correcting or is it actually moving down? So, all right. So you have different types of patterns. Sometimes once it moves up, and if it's correcting, it'll go sideways for a little bit. That means it'll keep testing a certain price area. So let's say this price area is kind of important. It'll test this area, it'll test this, and sometimes it may keep going. It may keep going for a while, and then you'll have a sharp breakout, right? Yes, it is true that this can also break below. That's right, that can. It can come and test this area down here, all the way down here, and then break back up. So you have to, that's why risk management is very important. And I bringing that up, but inshallah, I will go through risk management when we get to that point. So now, not only are you talking about sideways motion, but you're also talking about well, this sideways motion doesn't always come in a second wave. It comes early. So when the stock market moves up, it's going to correct. That's one thing you should always know. And this, I want you to look at these corrections or these pullbacks, what we like to call it pullbacks, as an opportunity to add to your position, get into a position, or take profits. There's only three things people do on pullbacks, right? Obviously, you want to take profits up here rather than down here, but it's better than taking it at the way you entered. So, and on the downside as well, you have a very similar trajectory. It'll pull back, going back up sharp, but as you can see, it didn't make a new high. So if it doesn't make a new high, the correction is still in place. It's still going to continue to correct. And I'll say one thing, that sometimes you can distinguish a correction, like a small pullback correction, rather than a bearish move down, by its volume. And I'll go through volume when we get to indicators, because it is an indicator. I don't use many indicators, but some of these volume is very important, as it shows you how much volume, how many people are selling versus how many people are buying. That's what volume is. If the volume on this move up right here is very high, let's say the volume bars are down here and they're very, very high, and the selling volume is very low, like the bars are very small, that means the amount of sellers are less and the amount of buyers are high. And that gives you a good representation that, this is just a simple correction, and then we should add at these points so we can move up higher. So yeah, that's how a pattern is created. This is called the ABCD pattern. It's one of the most simplest patterns out there. And every move that happens has these patterns. We'll drill down here a little bit more so I can show you some of these ABCD patterns, but they're everywhere. Anytime you look at a stock chart, you'll see this pattern. So this is the monthly chart. That means every one of these candles is 1 month, as you can tell. So you see a move that goes up like this. Yeah, it's a small correction here, but we have a small correction here, right? So, I mean, yeah, you didn't get in here, but it's better to get in here and not miss this whole move. Then it moves up again. Now here, like we said, we don't have a full down correction, but we have a sideways. This is a sideways correction that we just showed you an example of. See, kind of moves sideways a little bit, right? And then after that, it breaks out again. And then here we have a sharp correction, right? A big 1 or 2 candles down, boom, right? And then we have another big correction that goes, another move up, and then we have a small correction. But it does correct. No matter where it goes, it does correct. And eventually it consolidates, and then you have a big correction, right? That's actually a bearish market. But what I wanted to show you here is that you have sideways, right? Let me change my color here real fast. Right here you have sideways momentum, right? You have a direct pullback. You have a sharp pullback right here, and sometimes you have kind of a mix of both, a little bit sideways, a little bit up. But with all of these, they haven't yet made a new low. That's one thing you should remember, that we have a low right here, we have a low here, we have a low here, we have a low here, right? These are all higher lows. Higher lows means the trend is intact. The trend is moving up. These are all higher highs. Higher highs meaning the trend is going up. So great places to get in. You don't have to worry about a bear market yet, or you don't have to worry about large corrections. Like this would have been a great place to get in right here. I mean, I know they had a big correction coming back way over here to this price, but if you missed it here, get back in here. This just this great move up all the way to the highs, right? So that's a live example of how some of these patterns play out. Like this sideways pattern would be this area right here. Yeah, it's not going to look as clean as this. It never looks like this. This is just wanted to show you how the price action does move, but it's going to look more like this, right? Choppy, all over the place. But you have to look through all the noise and identify these patterns. And sometimes, we draw lines. Like TradingView has ways that you can draw these lines right here, right? You can draw lines, and then you can kind of figure out which way the trend works. So they give you the tools. Again, TradingView, for those who weren't here last week, it's a free charting tool. I'll go ahead and put the the link right here. Don't pay for the paid version, obviously. You can do a lot just with the free version. This is where I do all my charting. I don't do my trading here. My trading is done in Charles Schwab Thinkorswim. But this is a great trading tool just to identify trends, figure out what your next move is. All right, let's go on to the next pattern. Now we talked about this a little bit last week. It's called a double top. And a double top means it's made up of two peaks where price action will move up in a nice bullish trend, right? You have these ABCD patterns, zigzag patterns, whatever you want to call it, and then move up here. And then here, there's something going on here that, well, investors are happy that they've made this much profit, and then price kind of goes sideways, maybe makes another little peak. We'll come back here and then try again at that peak, and then eventually make a low, right? It'll break this lower point. I'll come back here, and then I'll come back here, and you think that it's going to go back up. No, it'll stop right here, and then the price will fall hard. Then a few people will get out because a lot of people go short as well. I don't short. Shorting basically means you're basically selling the stock or you're betting that the stock will go down. So you short the stock. And then here we have a correction that goes all the way down here. So when you have peaks like this sometimes, so how do you know it's a peak? Well, you got to look left, right? You always got to look that way because when you look at this peak, you can identify that, hey, something's going to happen at price action when it comes back up here. We have two peaks, or what we like to call in technical analysis, double top, right? And that is a reversal pattern. A double top is a reversal pattern. So when you have something like this, it's where price action likes to meet at a certain price point, whatever this price point may be. There's something going on there. Now, I'll show you an example right now. Price moved back up here, correct? And then once it got here, technical traders know that, hey, price has been here. I should take my profit. So if you're holding, let's say 100 shares, you may want to sell at least 60, 70. And then when the price starts selling off and starts making these lows, sell the rest of them unless you want to hold on to them. But I mean, you never go broke by taking profit. There's a proverb that we all like to go by. It's good to take profits, then come back in at a lower price, right? So now we have this correction that goes all the way down. And then we have something called this neckline. Neckline is basically, I mean, if you call this the head, this is the neck. This is where price stopped to go back up, right? So sometimes price will come back again at this area. Now, it could bounce and go back up, but in this example right here, we're showing you that price didn't just go back up. It hit this point, and now it's headed downwards. And most likely price will come back here, retest this area, and then continue downwards all the way down. And this pattern will be visible several times throughout some of our examples. And let's go to some of the examples right now. Again, this is called a double top pattern where you have a bullish move up, a correction, another bullish move up, and then a hard correction, which goes all the way down here. So let's go to our charts and take a look at a better example, inshallah. So yeah, this is definitely a double top, but not the one that we're looking for. This is just two tops that got hit and it dropped. Yes, that does identify these two peaks, but it doesn't identify this trend that goes below in this area, right? So this trend stopped right here, right? But if we zoom in right here to this peak right here, just to this peak, and this is April of 2000 when the dot-com bubble burst. That's the time frame that we're looking at. Now we're going to drill down into the weekly chart. Weekly chart basically means that every candle is now a week long, right? Every candle is a week. So we're going to zoom in right here. So this is that peak. The move has already been done. It had a nice move up, and now it's starting to kind of peak out right here, right? So yes, it's like I said again, it's not going to look as clean as this, as perfect as this, to the penny, to the dollar. It's going to be a little bit rough around the edges, and it's our job to kind of figure that out. So price moved up, right? All the way up here, and then it made a high right here, right? Let's see, right there, right? And then a price pulled back down from this area, and it said, okay, let's try it one more time. So this whole move right here, this whole move right here is one more time, right? And it comes back to the same area. Yeah, you have a little bit of wicks right here. You have these wicks, but the body is what's important. Wicks are definitely tell you the story. They do tell you the story. They say, hey, look, price has been here, but it closed right here. So if we take a line across like this, let's say right there. Okay, that's about 1525, right? 1,525. And that's a pretty accurate line right there. So price came all the way up to this price, rejected, right? So we'll say this is kind of like the neckline, like right here. It kind of rejected in this area. Came back up again, right? And now it's rejecting again, right? And now we have this area right here, right? Right. So it kind of came back to the same area and then it right here, right? This is the area where it bounced back up, didn't created a lower high, right? You have a high right here. Now it created a lower high. It didn't come back up here. So these two locations or these two areas can be seen as double tops. So 1, 2. Very similar to our example. Yeah, it's the price action is going to be jaggedy all over the place. That's why we'll zoom out and take a look, but you have to drill in to kind of see the patterns. Now, we did have a double top back in 2000. So most technical traders would be like, ooh, that's not good. They start taking their profits right here instead of waiting for the fall down here. So now what happened after that, right? Once this double top happened and hit the necklines, right? This is the neckline right here. We'll just say NL. This is the neckline. This is peak 1, right? That we talked about. Peak, God, I can't draw. Peak, okay, forget it. Peak 2, right? All right, this tool sucks. Let me go freehand. All right. Okay, so peak 2 is right there, right? So now the price action went all the way back here. Now it's kind of hanging out over here, making another lower high, right? You have a lower high right here. You have another lower high right here. Then what happens? Then it breaks this line. Yeah, there is an area. I wouldn't say it's a line exactly. It's never just a line. It's actually kind of like a square. It's like an area, a zone, if you will. And I'll go over more zones in our support and resistance trading webinar. But let's just say this zone is the neckline, and this line is the last point of no return right here. And then people are wondering, okay, maybe it'll bounce right here. So you had a big wick right here. So that means price went down here, bounced, and closed up here. Went back up here, rejected, came here, and then this is the candle right here. See this candle right here? That's huge candle. That candle basically set the tone that, hey, we are going to go close lower. We're not coming back in this neckline anymore. So then what happened to price? Went down here, came back, retested this area, but didn't break out, right? Didn't break up. It didn't come here and close above this. Now, if that happened, then we'll see a move back up, right? But it didn't. It stopped right here, rejected, yet another lower high. So what does all this mean? Basically, now it's correcting. We have a double top in place, right? Peak 1, peak 2, price comes back down to that same base where price started moving up, rejected, went underneath that price point, came back, retested this zone right here, whatever this zone is, right? There's a peak right there. And then it started moving back down, right? And after that, you have a huge correction, right? You have a correction that goes all the way down here, right? From 1500, we're talking about 775, 780. So almost a 50% correction. It's good to know when these corrections happen so you can save your capital. But yeah, that is an example of a double top right there. Yeah, it's not exactly perfect equal, but they hit the same price points right around that. Show you another example. Let's go to 2008. Financial crisis, right? Well, this is you can see the double top here, even on the monthly chart. We don't need to drill down any further, but we will just to show you. So now we come to 2008, very similar price point as 2000. Now traders, again, technical analysis traders are very weary of this price, right? 1525, 1500. They don't want to get that same thing repeated. So they're taking profits. This is a huge profit taking candle right here. See this candle right here? That's a huge profit taking candle because people know, all right, we're getting back to very similar levels, 1525-ish, right? Same as 2000. So people start taking profits. You see this profit taking candle right here. And some people say, nah, I think we're going higher. Comes back up here, more profit taking candles, right? So if you look at the monthly chart, this is one top right here. This is another top right here. So we kind of got a closed double top right here. And then you can even say that, hey, this is the neckline right here. Price breaks below the neckline, comes back, retests it, and we drop down again. We go all the way down, another 56 to 60% correction here, right? So let's drill down back to the weekly chart so we can actually see it clearly. Sorry, got to admit some more people. Apologize. There we go. So we're going to go to the weekly chart here. This chart. All right, there we go. Yeah, there we go. All right. So this right here is the 2008 financial crisis. A zoom in, a weekly chart zoom in. I mean, every candle is 1 week long. So here we have a nice move up, right? We're moving up like this in a zigzag pattern, making higher highs, making higher lows. Then we hit this area right here. And look at this candle right here. That's a huge candle, right? And price starts stalling in this area right here again, around whatever, 1550, 1560, starts stalling. It comes down here, makes a nice little V, and it comes back to a very similar point where that last pullback was, right? And now it re-challenges this area again, right? Retest this area, this peak again, this peak one, peak two. It looks like it's about to break up. People get very happy here. Like, ooh, I'm getting in. And they all get in right there. And then this monster candle comes in right here and just sinks everybody. And now you have your long positions trying to cover their positions and they start selling. And when they start selling, more selling happens. And then eventually you have a lower high. Now that's the first sign of a downward market or a correction. And then you have this push all the way down past this neckline. So if this was a neckline from on our double top, it goes underneath it, comes back, retest, right? Retest again, and now breaks down and then continues down. Like I said, it's not an exact area. It's more of a zone. You have to remember, like these necklines are kind of like zones like that, you know? So yeah, sometimes price may go above it, but as long as you know that price is not making another high, you know we're still dropping down. So it makes this peak, pulls back right here. And now after this, it's all downward, 50, 60% correction here, right? So another example of a double top right here. Now, if you look at this, you're not going to see this in the higher time frames. On the monthly time frame, yeah, you may see it right here, right? This is 2000, this is 2008, right? On the 3-month chart, you may not see it at all, you know. 3-month chart, this just looks like a double top, but yeah, you can call this a double top as well, but the neckline never breaks, right? So you have a top right here, a peak right here, a peak right here, and then you have, if you call this your neckline, right? It looks like it was about to break, but it closed above this and it bounced, and then it broke this and it took off, right? So this is not a double top. This is a double top, yes, but it didn't turn into a bearish market below this, right? It didn't come back up here like our previous examples and drop. Now this pattern is in this area right here if you drill down into the weekly charts, but this is a more of a macro view to show you how price action works. So, all right. So that's what a double top is. And I'll show you a few more examples. I showed you real life examples. So, you know, yeah, again, you have a double top right here, double top. It breaks right here. This is the neckline. Kind of, it's not exactly one price point because price can go a little bit lower above. It's more of a zone, right? So you got this area, you got this area. It breaks below. It comes back. It doesn't always come back and retest this, but it goes down. But once you see a candle like this, you know we're not in an uptrend anymore. We're definitely not in an uptrend, right? And then another example where price will come here, hit a nice clean double top. This is very clean looking. I rarely see charts this clean, right? But it happens. And then comes back, retest this area, 1, 2, drops, and then now you have a continuation of this correction or bear market, whatever you want to call that. Again, rounded top, 2 double tops right here, right? So a lot of people say, hey, sell right here if you're going short. But this is where you get out of your position right here because you don't want to write this all the way down. Conserve your capital. I don't believe in writing out like bear markets and then just adding here. No, it's okay to take profit up here. You know, you bought it way over here. It's okay to take profit. And if the price sinks down here, buy it back again. Dollar cost average it, you know, bring your position down. And you can actually apply this to anything. Like I said, there's position traders here. There's people who are day traders. There are people who are swing traders. And then there's people who just like to hold long term. This can be applied to any of those things. I even apply the same strategy to my 401k. I do manage my 401k like it's a trading account because while I continuously add dollar cost averaging, if I see a down market happening, like if I see something like this happening, And, I've been adding to my 401k, my employer matches 4%. I match it, and then, we can choose where you want to invest that. But if it's dropping like this, it's okay to pull your 401k out of, let's say, whatever large index funds that it's in, and then put it into like a stable fund where it doesn't do much, just stay stable, because then you save yourself from this huge decline. And then once it starts correcting again with technical analysis, with the knowledge of technical analysis, you can kind of figure out where to get back in, right? So you may want to get back in here. So let's say you miss this 50% drop on your 401k or your Roth IRA or your IRA, and then now you re-add those stuff from your mutual fund or whatever that is, that's a 4% stable fund, targeted fund, back into your more riskier investments or medium or higher risk investments right here. You save yourself this big drop, and now you can, conserve that capital and move back up. And that goes for anything, any type of position that you want. You want to take your profits, especially when you see big downturns coming. All right. Now let's do something on the inverse. Call it double bottom chart pattern, right? A double bottom chart pattern is a bullish formation, right? I'll show you right here. So this is the double top. We just discussed this, right? This is a double top. It's a bearish pattern, right? You go up here, you break below, you're dropping. But eventually this price is going to come here and it's going to do something like this, kind of like a W pattern, and it's going to break out. And that's the pattern that we're going to take a look at. Now that you know where to get out, how do we get back in? We watch for this pattern right here. It's called a double bottom. The double bottom basically indicates that there's a price point right here, and then it retests that price points multiple times. One, two, and sometimes you may have like little smaller retests, but if you look at the macro, the larger time frame, you'll see that it's very clean. It'll come here, hit the price point, go back up, hit the price point again, and then break out. And it's similar to the neckline here of a double bottom pattern, a double top pattern. You have a pattern like this as well, where this pattern will come here, it'll come back, retest this area, and then take off, right? So we'll take a look at some examples of that. Here's a more detailed, you have your you have your big downtrend coming. You have your lower highs, right? Lower highs, lower low, lower highs. And then you come all the way down here. And then price kind of corrects, right? It goes back up. It doesn't exactly go higher than this high right here, but it does go pretty high. So you can still call this a lower high. This can still be used as a lower high. But does it create a lower low? It does not, right? This is a low. It does not come down here and do this, right? So you have a low, but then it comes and matches that low right here, another low, right? So now technical analysis people are like, oh, that looks like a double bottom, right? Great time to get in, but it's riskier to get in right here because the price may go right here and then just reject hard, right? The better place, the more safer place to get in would be when it creates a higher high, right? There's lower highs, lower high, lower high, lower high. So once the price breaks above here, this right here is a higher high, right? Higher than this. So now we're kind of shifting. It's a change of character, or what we like to call in technical analysis a break of structure, right? You have this huge structure that's moving downwards, right? And now this price action right here, let me switch colors. So this price action that went up this way just broke this structure that's coming down. So that's a good sign. That's a bullish sign or a bearish sign if it's going downward. And now it comes back and retests that same high around that area. Again, when it retests, that means it comes back and touches that price point again. And now here is a great place to get in, right? If you didn't get in right here at this green dot, here's another great place to get in, or you add to your position. If you got in right here, you add to your position for a nice move back up. Yes, there are times where this pattern will fail, but most of the time, through most of history, these patterns repeat themselves over and over and over and over again. I mean, I'm giving you examples from 2000 and 2008, right? 2000, that's 25 years ago, right? So I still use these patterns today. So I'll show you some of these patterns right here as a double bottom. I mean, the biggest double bottom the SPY has ever had it's very visible right here, right? One, two, and then takes off, right? So, I mean, this can be looked at a double bottom, but I'll find you a double bottom in here. So let's drill down to the monthly chart. And it's already visible from here. I don't know if some of you can see it. You have a price point touch right here, it goes back up, price point touch. So we'll discuss that right now. And then we'll move on to the weekly chart and we'll drill down into that, right? So here we have a double bottom. We have a price that's moving down, right? Let's see. Yeah, price is moving down. We have a lower low, lower high, lower low, lower high. I keep repeating these because I want these to be ingrained in your head. When you see lower high, lower low, lower high, lower low, it's what you want to always tell yourself when you're looking at patterns, right? So we have a low, right? Price comes back here and then goes back up again. Obviously, it's another lower low, right? These are all lower lows, right? These are all lower lows, including this. This is also a lower low. But then price doesn't make another lower low, right? So you have this price point. If we take this across right here, let's say 750, 775, price stops right there. It comes here, rejects, goes back up, comes here again, and does not break below this. So hence, we do not have another lower low. We do not have something like this. We do not, right? So this is where things get interesting, where, okay, price may consolidate. Sometimes price will just go like this, back and forth, and just go until it breaks out. But for this example, we'll call this the neckline, right? So this price stop right here, so we're going to call this the neckline, right? Now, now we have a break, change of character, a break of structure. This is the structure that's moving down, right? Now, this price action, as it breaks above this neckline right here, now already we have a higher high. Any of these candles are a higher high, right? Because it's higher than this, right? So even if the price kind of comes this way, it doesn't come all the way back down. It kind of goes sideways, right? Like I said, price can go sideways and with a zigzag pattern, right? Some prices go like this, some prices go like this, right? And then they break out. Very similar. So that's what this price is doing right here. It's kind of going sideways right here, relaxing right here, but it's above this line, never closes below this line, and then you have a strong move up. Now you have a high. Ooh, look, we have a higher high. And now the pullback is where you need to figure out whether you're in a bear market or you're actually changing and going into a bull market. Is this low right here? This low does not come down here to retest this, and we're off to the races. So that's an example of a double bottom. You have one touch right here, you have another touch right here, and we're gone, right? So very similar to our pattern right here, double bottom. Comes back here, this comes back and retests cleanly. The example that I showed you right here kind of goes sideways and moves up. So your entry point, or obviously you guys want to know entry points, right? So it's right here, boom, boom. You draw out a line right here, goes back up. My entry point will be anywhere in this area, right? Anywhere in this area, you can enter that position right here, right? And the thing is that you manage your risk. If the price goes below this area, like if it goes down and then it goes like this and it drops like that, yeah, get out right here. Yeah, you're gonna lose a little bit. You have to lose. You have to lose to be a trader. You have to lose. That's the lessons that you're gonna learn, inshallah. But just, we are gonna repeat the same mistakes over and over again. But yeah, so that's a double bottom right here, and that's how a double bottom works. I'll find you some more examples. Let's drill down to the weekly chart. Let's see. There's a weekly chart, double bottom. There's a V-shaped recovery, so we'll skip that. Oh yeah. So this looks like a triple bottom. It's the same example we just looked at, right? Price comes down here, it creates this area right here, right? And it retests this several times. So as you go deeper and deeper into like the weekly, we're now in the weekly time frame right here. But if you go in the weekly, daily, 4 hour, 2 hour, you will see those more touches. Yes, on the broader spectrum, it is a double bottom, but you will see it kind of consolidate, like I said, it consolidates here. And if you look at that from a wider lens, yeah, it'll look at like a double bottom. But a triple bottom's even more confirmation that the price is consolidating and it's going to move up. And now if you look at this, now that we're drilling down to the weekly chart, we see that the price does come and almost touch the neckline. This is kind of like part of the neckline right here. You'll see it actually makes a physical touch back at that same price point, right? It may not look like that on the larger time frames, but if you really want to, come in and snipe out that trade, you go into the lower time frames and like, oh yeah, I want to get in right here, beautiful, and then you ride it all the way up. All right, so that's our double bottom pattern. Inverse from a double top, bearish pattern, double bottom, a bullish pattern. And here's another, example of a double bottom right here. You got one bottom, neckline, bottom, breakout. So yes, your entry should be right here in this area. Anywhere in this area right here. You want to get an entry in, right? You don't want to get in right here because we don't know if the price is going to move down here. You know, it could actually go lower. So just to answer your question, Kareem, sorry, I am trying to look at the questions as well at the same time. We are going to have time for questions and answers at the end, inshallah. So just save your questions or just put them in here and I'll go right through them. Okay. I apologize. Okay, great. Thank you. All right, awesome. So now moving on, another example of a double bottom right here. All right. I had several examples in here, but I just feel like it's more beneficial to look at just a real chart, with price action that's actually taken place in history. I mean, it's not just in history. This is 25 years ago. We can go current, you know. We can go to the current time right now and then find you one. They're all over the place, right? They're all over the place. This is the larger time frames. If you drill down to like, let's say like a daily chart or something like that, you know, you'll find these tops and these bottoms all the time. So they're everywhere, especially down here. You'll see like a correction happen. You have like a little double bottom right here. You have a little double top right here. But yeah, I mean, obviously the correction wasn't huge, but there's still a correction. We cannot tell what type of correction is going to happen, but the correction is going to happen. We want to say that there's something's going to happen, right? For example, like look at this. This is almost like perfect, right? This is February 14th, February. We're looking at the daily chart. That means every candle is one day. Now we're really drilling down. This is 2022, February 2022. So we're looking at 20 years after the dot-com bubble burst, which was a double top as well, right? So you have price and moving up, right? Comes back down, creates this neckline right here, right? Goes back up, creates this double top, right? We have one top right here, second top, breaks below, retest. This is almost like picture perfect, really picture perfect, and continues down, right? We don't need to worry about this. We don't need to worry about this. We just need to focus on this right here, that there was a correction. So for some of you swing traders who are trying to swing trade a stock and you see that, hey, I'm long. I'm long right here. Wow, I made a good move up, made a second move up. Oh, I got to be careful. I may want to take some profits right here because it's retesting and dropping again. Now it drops below, comes back here, doesn't make a new high, get out, take your profits right here. Yeah, you may be a break-even trade, or you may have come in here, it's made like 10% or 5%, but that's better than, losing money right here. So these patterns can help you identify where to get in, where to get out. They're very, very useful. But remember, they don't always play out. They don't always play out. So hence why we have risk management strategies in play, right? And if you want to look at this as a double bottom, you can, right? It's not beautiful, it's not perfect, doesn't hit the bottom all the way, but you do have a break. You'll find it anywhere and everywhere. And sometimes two people will look at the same chart, and one person will find a double bottom, one person will find a double top. You know what I mean? It's sometimes it's not all the same. It's just what your bias is, what your emotions are that day, and that's the way you do it. So I mean, right here we have a similar pattern, but this was more of a head and shoulders pattern, which I'll show you. But it can be a double bottom if you look at it in a higher time frame. Like I said, there's a lot of patterns out there, and you can see what you want to see. All right, let's move on to the next pattern. We'll go back to our famous. All right, so the next pattern is a pattern that plays out quite a bit. These are called bull flags, bear flags. They call them flags because they look like flags, right? You got a flag like this, right? They're a flag, right? Meaning that the pole right here is your move up or your move down. And then this area is called a consolidation. Consolidation is basically price is not making highs, the price is not making lows, and it just stays in a zone, right? And this is very similar to the ABCD patterns that we were talking about earlier, right? Price moves up, and then sometimes we have a move like this, right? And then boom, take off. So this area has a name, right? And that's called bull flags, right? Bull flags is when the price is moving up and the price decides to consolidate sideways or make slightly lower lows, right? So you have, I know they call it pennants and flags, but these two are the same, right? These two are the same, just different price structures, right? Price moves up perfectly right here and then just starts, kind of stays in like this little tight zone. And then eventually it breaks out, right? Here, price makes a lower low, right? a low, it makes a lower high, makes a higher low, right? This is a lower high, right? This is a lower low. This is a low, but this is a higher low. Lower high, higher low. I know it's the inverse, right? Because it's kind of like just consolidating to a price point where boom, breakout. I love seeing this. Tesla has done this multiple times. Almost every single stock has done this multiple times where the price will get so tight and narrow right here that it has nowhere else to go except down. Yeah, it can go down, but throughout most of history, in this bullish pattern, if you're coming from move up like this, price will break out upwards, right? Sometimes it may go like this, retest this zone right here, and then break out. So that's called a bullish pennant, bull flag. You don't have to remember these names. I just call it sideways consolidation. I just call it a pullback. And you can draw lines like this just to kind of see, oh, it's a pennant, it's a flag. What matters is that where's the entry, right? That's what everybody wants to know. Where do I get in? Well, on this, you get in right here at the break. You don't want to get in up here. I mean, you can get in right here, but just manage your risk, right? In case it's going to pull back and then, because sometimes they come here and just drop, come right and then go right down, right? Right. Your entry for this obviously will be in this area right here. Just as soon as it breaks. So when that break happens, you can enter that, and then it may pull back right here, but you hold that area and then you move back up. And the reason why we don't enter here because we don't know. We just don't know. We can't just guess and move forward. That's why we use these patterns because it takes the probability of these patterns working out are very high, right? That's why these patterns are used by traders all over the world all the time. And similarly, on the opposite side, you have the bearish flag and the bearish pennant, where you have a move down like this, and then it's a consolidation, right? Just like an ABCD pattern, but you know, a move down, right? And then it moves down, right? So very similar. You have price that moves below, and then it consolidates in this little range right here. And then it's just waiting and waiting. So yeah, yes, you may think this is a double bottom, right? Yeah, good. That's a double bottom. Yes, it is. But it never breaks the neckline, right? That's what you're waiting for. How does this thing turn into one of these? You're waiting for this consolidation to break, a break of structure, right? The structure never breaks. It kind of hangs out right here, right? And then now it breaks the structure. Now it goes below. So it's a short. It's the stock price is going lower. Yeah, if the price comes back up here, breaks this above, comes back and retests and takes off, yes, the break of structure, it's different, right? But right now, we're just going to focus on these bearish flags and bull flags. Similarly, when you have a bear move down, you have a lower high, right? And then you have a higher low, lower high, higher low, lower high, and then a breakdown, right? So you don't want to get caught up in these shorts. Definitely, if you have a move down and it's doing a move like this and you haven't gotten out of your position, then it's a good time to get out of your position right there, right? Good time to get out of your position. That way you don't face this move below because it'll go down again and it'll do something very similar, right? Right? And then it'll break down again. So that's what we call these. I'll show you some real life examples. So let's do a bear flag example right here. This one I like to drill down a little bit more into time frames because it's harder to find on the larger time frames. I mean, you can still find it, um, but it's better to find on the lower time frames. Let's see. I'm gonna go to the weekly chart. So there's a good example right here as well. I just stick to one chart, right? S&P 500, but you could do it at many charts. Now remember, it's not going to be as picture perfect, beautiful like the way you're used to seeing it, but it is still there. It does happen. Um, let's see. Yeah. Okay. So this is a large version of that same pattern that happened right here. Sorry for all this movement, but here we go. Okay. You have a move up, right? You have a nice move up that's pushing. We're in a bullish market right here, right? We move up, and now we have correction. Yeah, it's pretty deep correction, but basically we have a low, we have a higher low, higher high. I mean a lower high, sorry, and then we have a higher low, right? Again, another lower high, a higher low, and so it's a much sharper pattern, right? right? But it is a pattern. And then you have the breakout of that structure and then retest and it's gone, right? So yeah, this is a consolidation as well. Yeah, it's sometimes you may see it as a sharp pullback, large candles and stuff like that, but you have to see how price is acting, right? It made a low, it made a higher low, then it made another higher low. Meanwhile, it's making a lower high, right? Another lower high. So when these prices are converging like this, you will call this, a bull flag or a bullish pennant, whatever you want to call it, right? Price moving and boom, price breaks out, right? Very simple. I mean, it's sometimes hard to see. You have to have a lot of chart time. Or by that I mean that you have to really spend a lot of time on charts, to see this pattern. And sometimes you have to drill down to like the daily chart, to really see it before you get in. But they're everywhere. I constantly trade these patterns. I'll show you one towards the bearish side right here. One second. To go into like a bear market first. See. Yeah, I mean, yeah, you do see it a little bit here. I may have to go drill down a little bit more further. And this is more of a sideways pattern. It does go back up here, it consolidates and drops, but I'm not able to find a better example for you. But let's see. Problem is, this trends have been so bullish. It's hard to find anything bearish around here. I mean, yeah, we got to go back uh, where when back in 2000. I mean, these patterns happen all the time, but I trade in shorter time frames, so daily, 4 hour, 1 hour. So I'll see these patterns more often. Here you have to, struggle a little bit to find it, but you will find it. So let's look over here in this area. You do find it here. So if you look at this area where price does move up right here, comes back down, makes a low, makes another high. Yeah, I mean, it's kind of a bearish pennant, right? Kind of, yeah. It does this. It doesn't go lower than this. It goes a little bit higher, but it's still lower than that. And then the price breaks down, right? So yeah, that can be looked at as a bearish pennant or bear flag as well, like that. Bear flag is basically any type of price action that is moving down and then consolidates. It almost looks like it's going up. It almost looks like it's going up, but it's more of a sideways trend, right? So once you have this sideways trend going, then you know that we're not exactly out of the clear yet, because if that breaks lower, then we're dropping lower. So let me show you some more examples here. So these are all different patterns. You have something that goes sideways downwards, right? You'll have thing that goes sideways like this, right? Then you have stuff that goes downwards like that, like these right here, right? And then you have the ones that we're looking at, the pennants, right? That more like consolidate and become tight. And these become tight in different ways. So they're all different ways of bullish patterns. And you kind of want to identify them. These are more prevalent than these, and these happen all the time. And then you have similarly on the bearish side where you drop down and then you start consolidating this way, and then boom, you break down. Very similarly, bearish pennant patterns, bearish. You don't have to pay attention to these falling wedge patterns. You just know that these are consolidation patterns, bullish, and these are bearish consolidation patterns. And they're flags. They're almost like the price kind of squeezes in. I like the flags better because they'll break out, but they won't break out as hard as this. What I mean is, when these guys break out, they break out fast and hard, and the price is tough. It's a hard move up or it's a hard move down. They break out with a lot of volume, with a lot of volatility. So when you see this pattern, you might want to pay closer attention because it's a great way to get in and capitalize, inshallah. All right, let's move on to the next one. Again, more examples. Don't pay attention to these names, but very similar, bearish right here. This is bullish, and they keep moving up. Here are some examples. Like I said, it's sometimes you'll see all these little movements, but you have to see the highs, right? You have to see what are the highs doing? We have lower highs, right? We have higher lows right here, and we have a tight range, and now you have price breakout. I think this is an Ethereum chart right here. So again, Sometimes they may not all be equal, but you have to get that macro view. You got to zoom out a little bit to find these. You have a nice move up right here, right? Price is moving up, and then it hits this. You have a lower high, lower high, lower high. Meanwhile, you have a low, you have a higher low right here. Small higher lows, right? Small, small. And then you have a breakout right here. And obviously your entry will be right at this breakout right here. Once it breaks this structure, you see that like the price kind of move up like this and a bar closes above like this. So the next bar will go up like this, right? And then you'll have price movement like that. So you want to get in right around this area, right? And talk about the stop, that's risk management. That means, hey, if the price goes below this, that means if it comes back up here and goes like this, I want to get out like that. Save yourself. Excuse me. Here's examples of a bearish trend right here, where you have a downward move up and then you have a consolidation, bear flag, and then boom, drops again, right? Another one where you'll have it kind of holds a certain price point and it'll kind of go sideways a little bit and then it'll drop again. And then you'll have that move up and move down, I mean. So honestly, it can be applied in any, like I said, technical analysis can be in anything, commodities, Forex, if you do that. I mean, I don't really go into Forex too much. I'm mostly in crypto and stocks, but as long as you have charts, these patterns happen. Okay, so just remember that. Now we'll go to, how much time do we have left? All right, 8 o'clock. I want to save some time for question and answers. I'll go through one more pattern and then we'll go to questions, inshallah. It takes about 5 minutes. So now we have a reversal V bottom. Now, these are very common. A V bottom is when price just falls hard, right? Right? Price is falling hard and then it just hits. Instead of doing a double bottom, you just have a strong pushback up. There's a lot of buyers waiting down here. This is called a V reversal, right? Whatever you want to call it, because it looks like a V. It comes here and boom, directly moves back up. And then here is kind of like a neckline, right? We have a neckline right here. And as soon as it breaks above the neckline, retest it and it'll move up, right? So very similar. It's exactly the same thing, but I don't know why they put it twice. But yeah, so this is called a V bottom, right? A V bottom is a reversal pattern. A lot of people look for these patterns. Sometimes they look for a double bottom, right? And if they don't find that, they see that the main thing right here you have to understand is that in anything, a double bottom or a V bottom, the neckline is the most important part, the neckline, right? This is where you have a change of character or a change of structure or break of structure because you have the structure that's moving down, right? And it's been doing that for days, and you're like, wow, when is this going to happen? And then you have a sharp move down like this, and the V bottoms may look like this. They may come back up, but they'll go sharp and they'll break this area. So this is the most important area right here. If you see a break of the structure where it fell from, right, and then it goes back up and retests this, that's a very important area. When you see this happen, it's a great place to enter, right? Because it may not, it can go like this and then go back down to create a double bottom. Yes, that can happen as well. But if you have good risk management skills and you set your stop loss right here, you get in this area and then you have a nice move up. V bottoms are very rapid. They happen very quickly because sometimes it's just one bar right here and there'll be another bar with like a bottom wick, sorry, wick, right? So you have like a bottom wick right here, like this. It'll look like that, where price will go all the way down here, it'll get bought back up, and then you'll have a huge candle moving back up like that, right? Then you have a reversal, pull back, retest, and take off. So let's take a look at some examples, inshallah. So here's a much clearer picture of that, kind of a designed version of it, where you come here, the V bottom hits it, breaks the neckline, move up, right? There's S&P 500, where you have this action going like this, and then boom, it has a sharp drop. But do you see this one candle right here? See this candle right here? This candle right here means that's a sharp move up, right? And now your neckline will be somewhere around here, right? And then it'll come back, go back here, retest this. Oh, it retests only a little bit, move back up, retest this, and then moves back up. So it's another example of a V bottom reversal. Let's see if we can find some real examples of V bottoms. Another V bottom right here, where you have your neckline in this area, all right, and breaks it, comes here, retests this area, and then it's gone, right? Um, there's a bunch of V bottoms here. I'll show you, and then and on some real charts, inshallah. 1 second. Where are we at? All right. Back to the financial crisis. All right. So here, I mean, when we had the dot-com burst, the consolidation was, it kind of took its time going down. Here, I feel like it dropped hard, right? You have October 2007, where it started, and it ended around February 2009. I mean, it's still 2 years. That's a harsh 2 years. There's no break at all, especially for people who are like day traders or swing traders who are trying to take these small swings, like, oh, yeah, price is going up. And sometimes they may take that swing up. Remember, we're talking about the monthly chart here, right? This is the monthly chart. That means everything is a month. So in this part, you may have three really good weeks or 4 really good weeks where people will take swing trades and move it back up. But we're talking about our V pattern right here, right? So here you see it very clearly, right? It's moving down. You have a lower low, another lower low, and then you have a sharp move down right here. Kind of hesitates a little bit right here, and then boom, V, right? And immediately comes back up. Doesn't do a double bottom. It just comes right back up. So the neckline will be somewhere around right here. It breaks above this structure right here. Retest this with this little wick, and it takes off. Or you can also say that this is a retest as well, right? This is kind of like a retest as well. Comes back and goes right above. So that's, I mean, when you're coming off the financial crisis, this is a great time to look for a V bottom. A lot of people will look for V bottoms, that are we going to get in? When do we get back in from this huge crash? Are we going to get in now? When are we going to get in? So V bottoms are a great way to kind of take that. So basically the structure goes like down like this, comes back up. You have a neckline. It'll retest that area. That's your entry right here. And then you take the move back up. So let's see if we can find more examples. I mean, these are all V bottoms, right? It doesn't have to be like a bottom bottom, but it can be even a short correction, come back up, retest the neckline and move up. So I know, I think what happened in 2020, that was definitely a very like a flash crash, right? Like the COVID crash right here. Let me drill down to the weekly chart. Yeah, right here. I mean, this was a COVID crash, right? Yeah, February 2020. Um, when you see these gaps right here, that means that's how fast the price is moving overnight and pre-market, that it creates like these huge gaps. And we'll go over gaps later on, but you can see that this price was not stopping. I mean, huge move down, another gap, huge move down. And then it didn't really do a double bottom. It had this huge price candle right here. If I show you the volume here, if I turn it on, you'll see that huge amounts of volume goes right back up. And you can call this the neckline right here, right? Retest this, beautiful retest, almost picture perfect. Okay, let me draw these lines out a little bit cleaner. All right. So we have a move down, right? And then we have a neckline that goes like this. You have a move back up, breaks the structure, retests, right? And then we're gone, off to the races, right? Now we break this structure too. Retest twice. We have a little bear flag right here, right? We have a lot of things going on right here. We have a zigzag pattern, we have a V bottom, we have a bull flag right here, and then the breakout, right? So that's a way. V bottoms usually happen when price rapidly moves down, and it creates like this, almost like a crashing way of falling. Look for the V bottom. So um, I'm going to stop it there, so inshallah I can take some questions. Um, Again, another V bottom example. So if you have any questions, I'll start reading through the chat. Please let me know. You can go ahead and ask questions right now, and I'll try to answer them to the best of my ability. If you want to just raise your hand, if you want to voice your questions, I'm okay with that as well. You don't have to type it in, no problem. Again, there are hundreds of patterns. There are hundreds of patterns, but these are some of the most popular patterns that work most of the time. You'll find them everywhere. So zigzag, you got to remember the zigzag pattern. You got to remember some of the ABCD patterns, the reversal, double top, double bottom. And I'll be sharing this video as well and the notes on it. So look for it on the WhatsApp group, and I'll send it to you. Pay for a subscription to get guidelines worth it, or can it be misleading? Brother Ahmed, I think you're talking about TradingView, right? I'm not sure. I got TradingView a long time ago, so I just have the free plan. I don't have a regular plan, So I mean, I wouldn't pay for it. I don't think it's worth it. You can use a free platform like Thinkorswim or Charles Schwab. Um, so. Um, the best resources are out there on YouTube. Honestly, I'm just giving you a brief overview. Obviously this is very extensive. You can go into it, but there's a lot of good YouTube videos. I mean, I did a lot of my learning on YouTube, but I didn't know where to start or where to end, so I was all over the place. Hence why I created this training series right here. This webinar was actually created back in 2020. I had a lot of friends who are running out of jobs and stuff like that, who are losing their jobs, looking for other means of income. I was working from home. So I created this um, training course to help them. But I got a lot of my information from YouTube, and I had some books as well that I've read that I use as textbooks. I can send you names of textbooks as well. But yeah, YouTube is unlimited. There's so much stuff out there, even on the web. Um, you'll find a lot of this stuff. So. One of your slides on mentioned showed taking profit in downtrend. Can you explain? I think that slide, what you're referring to, was a double bottom. It's for people who short, right? I don't short. Let me check. Let me go back. That was a question. So yeah, taking profits on a downtrend. I mean, um, so there's two ways, right? Obviously, I don't short, so I don't usually take profits in a downtrend. I'll get out much before we hit the downtrend. But if you're in a move up, if you're taking a move up and you have a position, when to get out, right? You want to get out before the downtrend begins, like completely begins. So for example, let's say you got in on this neckline break, you have a double bottom right here, right? You break out, this is your entry right here, right? We'll just highlight the entry right here and we say, hey, you got in at $1,000 or 950, right? And you make this nice move up. And you come here to this area and you start seeing this double top, right? I mean, once it breaks this neckline right here, you got to get out right here, Or if it comes back to retest and doesn't make a higher high, you have two areas to get out. So you can get out right here, 1,400, still made $400 a share, or you can even get out right here on this. It breaks down and it comes out. Obviously, the lower you get out, the less money you make, $1,300, whatever, but you definitely want to get out on these lower highs, right? Because now the trend is switching, the double top has happened, so you want to take your profits here. Obviously, if it's a very, very long position, you've been holding it for years and years, then you want to take a lot off the top. I would take at least 50% off here. And then when it doesn't make a higher high, I would take another 10% off. Then eventually I would have a point of no return. Like, hey, I don't want to lose more than this, and I'll get everything else here. But you want to take profits on the way down as well, because you don't know how long this bearish market may last. You don't know how long this trend is. No, I don't. I don't worry about wash sale. Not as much. I mean, you have to be careful. You have to do your research. Somebody asked a question that when you get in and out, do you worry about wash sales? Basically, if you're holding a long position, let's say for Tesla, and you have shares, but then you kind of swing trade them in the middle, and then your losses are greater than that of your regular position and stuff. How do you handle that? Um, I'm I'm not the best person to ask for that. I would definitely do your research on wash sales. There's several really good YouTube videos, and for the sake of time, I would defer you to like the YouTube videos to figure out wash sales. But so far, I haven't had an issue of that. I'm pretty careful about that. So yeah. Yeah, Brother Muhammad, I will send you the recording as well, inshallah. Do you look at standard deviation levels? Yeah, I do, and that'll come in when we do when we start opening up our indicators, right? Right. These are indicators, and unless I'm not reading your question properly, you know what I mean? But we standard deviations. Sometimes I do, but most of the time I'm just focused on price action, and I use very few indicators. And we actually have a whole webinar dedicated to support resistance indicators because a lot of people like indicators such as these, right? These are called moving averages, and then they kind of show you the price of that, where the price should be, 200-day, 9-day, 10-day. So, but I'll go through that more in detail when we get to that webinar, inshallah. Um, yeah, For swing trade, what is the time frame do you look at in the chart, weekly or monthly? For everything, always start off with a monthly chart. I mean, you have to look at the monthly chart. It's important. So let's go to current day today. I mean, we just made another high last week. So I mean, the stock market is crazy. It's so inflated right now. But so I mean, I always start off here at the monthly chart and say, okay, what's going on here? We have a bullish move up. Then I'll drill down to the weekly chart. Okay. We kind of have a double top that's happening right here, Let's see how price reacts here. So now you're kind of knowing that there was a pullback here, right? And now we're coming back up. We're retesting this. Now, if next week we just take off this way, then yeah, there's no double top anymore. We're moving up, right? So now we're in the weekly charts. We kind of like look at weekly charts. Where can I plan my entry? Where can I plan my exit? And then when I need to actually enter, I'll enter on the daily chart for swings, right? And it depends on how long you're holding that swing for, right? If you're doing it for like let's say a 3 week, 3 month swing, then yeah, you may, if you look at the weeks, like next week swing, and just want to hold it for a few days, then you want to look at the 4 hour chart, but definitely the daily chart. You want to go monthly, weekly, then daily, and then you'll see a lot of different patterns when you see on the daily chart. Like for example, this is a bull flag, right? Right? Kind of price consolidates right here, and then you have the breakout right here. There's your entry, and if you're planning on an exit on the highs, then there's your exit right there, right? So yeah, it's still recording right now. The Q&A will be included in the question and answers. Yeah. So yeah, you want to look at the daily chart, and sometimes you can even look at the 4 hour chart. But the 4 hour chart will uh, really drill down, and sometimes it can get very, very confusing because you have a lot of these gaps and stuff. So you don't have fluid price action. You have like these weird gaps everywhere. So you have to be able to see it on a macro view first, and then if you know what time frame you're looking at, what area you're looking at, then yeah, definitely drill down to the daily chart, weekly chart, and 4 hour chart to make your entries if for swings. It also depends how long your swings are. If you're holding from months versus weeks and days, you have to drill down further in. So, but yeah, by now, if you've attended both the webinars, by now you should be able to look at a chart and say, hey, this looks interesting. I could probably plan a trade here, or I can take a look at an entry point. I mean, let me see. Let me go into some. This is GM. What is this? Peloton, Coinbase. Like Coinbase has been doing something interesting. I'll turn off all of these indicators and show you real fast. All right, there you go. We hit it. We hit everything. So I can just give you a quick example. So this is Coinbase right here, COIN coin. And this is the weekly chart. So from March 2024 all the way down to September 2024, it's been consolidating down, right? So you have this move up, right? And now it's basically bull flagging, right? You're going for a bull flag like this, right? So bouncing off. Again, it's not going to be perfect. Sometimes it'll look like it's about to break out and then go back in the bull flag, right? As long as it didn't break this high up here, right? Right? Boom. Again, you have a low, and then it comes back up here, hangs out here for a little bit, and then that's the break. So yeah, your entry could have been literally right here at this point. So if you want to see a price, 220s, great price up here, you'll see if what price it pulled back from. So when you have a high point like this at 280, and then you have a bull flag that's happening like this, you know, even if you enter at 220 and you say, you know what, my profit target is 280, that's $60 a share. I don't know. In my book, that's pretty good. Like buy 100 shares right there. You're looking at a decent amount of money, just in about two or 3 weeks. Because look, this weekly candle, if you enter here, let's say this was Monday, this was Tuesday, this was Wednesday. You enter on a Wednesday, Thursday, Friday closes here. Next week, it just takes off. You can exit right here. You can take off like 50 shares right here, take off 50% of your position and take off the rest up here. And you're talking about 330, 220 to 330, you almost make $100 a share off of this pattern. So um, that's a great example. I wasn't able to find these examples earlier, but once you drill down, you can really, really immerse yourself and find these patterns. They happen all the time. They happen all the time. Um, so yeah, that was coin. I was in a trade on that. So That's why I took that. That's why I have it here on my watch list. AMC, yuck. I don't know who's in AMC still. Obviously, Tesla. I mean, Tesla is one of my most traded stocks. I would say, like if like day trading, swing trading, because it's just there's so many patterns in Tesla. It's constantly creating patterns and constantly creating great opportunities to buy. So let me see if I can go down to daily chart and show you some. Like this was really a consolidation that, there was a trade that happened here where the price took off. Now, if you look at this area right here, and if you drill down to this area, it was a bull flag. Let's see. Let me see if I can find that. Wow. So there it is right there. Yeah, it's a weird bull flag, but it was a bull flag. So you have price moving down like this, right? Right. So sorry, do some better lines right here. There you go. So you got price that moved down right here. Reject. Now this is a 4 hour chart, guys. So that's why it looks weird with all these because pre-market, aftermarket, moved down right here, came right here, and literally gapped up. This gap basically means that it did it in pre-market or it did it after hours. So unless you're trading pre-market after hours, it's very hard to time your entry on this one, right? I didn't trade this, but I just want to show you an example of a breakout that happened right here, consolidation, and then the move up. So this, yeah, this may look, like, what is all this? Well, that's consolidation. Sometimes it will not break the high right here. It'll move up and then, but if you look at this on like a daily chart or something like that, if you just move up just slightly, then you'll see that it's the same move without all the noise, and it moves up much more cleanly. So, so yeah, you can plan your trades this way, inshallah. Roblox, I don't want to get into too many names right now because then that'll go off. But okay, we'll just do one quick example. My brother wants me to take a look at Roblox. My kids used to play this stuff back in the days, I think. I'll just look at it from a more macro point of view, okay? So this is a monthly chart. As you can see, Roblox doesn't have them. It just came out in March 2021. It IPO'd in March 2021. Had a nice move up, consolidating. So yeah, okay, let's go down to weekly charts so we can actually see some patterns. It spent most of its time just bottoming, and finally has a break. That's what it looks like. So if we look at it from, I mean, obviously, if it came in today, if it came in here, if this was the open, this is kind of a structure right here, right? There's a break of structure. If it breaks, I would say 67, 70, like even just to be safe, this area right here, 75. It may do this. It may, because this is a area of support, right? Where price bounced off of it, went off here. So price will gravitate to this area, this zone, right? This square, right? Between whatever, 67 and 75. It'll gravitate here. It may come right here. It may hang out here. Break above. You're looking for the break. But not only are you looking for the break, you're looking for a retest, right? If it comes back here and retest this, that's not a bad area to get in right here on this retest because then you can just say, okay, well, if price closes back below 65, I'll just get out. And then your profit targets can be 100, 120, 140. Again, it's not financial advice. I'm not telling you to get in. I'm not in Roblox. I don't trade Roblox. But the brother asked, so I'm just information, just technical analysis. I do technical analysis on some people who ask me to, but that's not what I do most of the time. But you have this nice little zone right here that it just keeps going higher and higher and higher. I was expecting this to actually drop because this almost looks like a bear flag if you look at it. See, right? Looks like a bear flag, but again, things happen, right? It broke above. If it broke below, then you'd have a retest and push back down. But yeah, I mean, it has a nice move up. So look for some resistance in this area right here. It may hit this, it may correct and come right back down. It may even come back down all the way down to this level, $50. So, okay. If there's no more questions, then inshallah, that'll be my time for the day. Thank you very much, guys. Jazakallah khair for coming and attending, inshallah. The next webinar is going to be next Sunday. Yeah, a week from today, inshallah. And we'll be covering, let's give you a good idea what we're going to be covering. We're going to supports and resistances. And this is super important. With this, you can actually go ahead and put on some trades. Trends and patterns are great, but everything works within supports and resistances. So inshallah, next week should be a really good one. But Jazakallah khair. Thank you guys for coming. I hope you enjoy the rest of your Sunday. Hope you guys have a good week. If you have any questions, it's posted in the WhatsApp group. And once this recording is uploaded to YouTube, I'll go ahead and post this as well, and the AI meeting notes from this meeting. So thank you very much. Assalamu alaikum.
جزاك الله خير.
Wa yakum, inshallah. No problem. I'll post a link. I'll post a link in the WhatsApp group right now. I'm just going to stop the recording. 1 second. If you want to hang out for a few more questions, I don't mind it. Let me just stop the recording.